Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we look at documents and basics. The objective is to have a quick overview of source documents, the filing, double entry, and completion marking. Now, the first question is, which documents are recorded? What do we record, rather? We record opening balances and reversals. We record income and receipts, purchases and payments, wages documents, banking documents, borrowings and journals, plus year-end adjustments. That is broadly what we record in accounting and bookkeeping. Now, below here, we look at the various source documents. The first one is a receipt, got an invoice, a check stub, deposit slip, payment voucher, debit note, credit note, statement of account, bank statement, loan statement, plus a credit card. Under normal circumstances, nothing should be recorded without a source document. And if it's found by tax authorities, then that whatever is recorded is disallowed, particularly the expenses. It turns into a disallowed expense, as was mentioned in one of the first sessions. Now, normally business owners who are most likely to enroll on this course understand their documents. Although we may have a small confusion between a receipt and an invoice, this one is for credit transactions and that one is for paid transactions. Check stub, check and check stub, those are to do with bank transactions. Deposit slip, money taken to the bank. Payment voucher, money paid from or by the business, normally before, well, it's common with larger businesses. Smaller businesses may not. But normally, money leaving the business, there should be some form of documentation which provides a trail and to support the transaction in a way. And on that payment voucher, we do indicate who authorized, who paid, and so on and so forth. Now, a debit note is aimed at increasing. Well, it's for an understatement on an invoice. An invoice had less than the amount it should have. So this one covers up the difference. Of course, the alternative is writing another debit note, another invoice rather. And then a credit note is supposed to reduce whatever effect, whatever increase in value was generated by an invoice and a debit note. So this one reduces. And then the statement of account is normally used with creditors, credit suppliers. And we often use it for reconciliation to confirm that what the business has recorded agrees with what the supplier has also recorded. So there's that extra reconciliation that we have not looked at. What we looked at is reconciling the creditor's control account and the creditor's ledger. But then this one is an externally sourced document from the supplier. Then the bank statement, we looked at this during reconciliation. Now, loan statement and credit card statement, we've not had the opportunity to look at those. Those should be in the next course, not this one. Now, next to that, we look at filing, documents management. Small businesses would normally have about 7 files. You have one for correspondence, one for income and receipts, one for purchases and payments, one for banking, one for wages, one for periodic bookkeeping reports, and then the last one is for the accounts records. These are called accounting schedules as well. Now, when we look at the mini year-end reports checklist, all those reports ideally should be filed on number 7. Now, number 6 should be for periodic reports. Let's have a quick look here. Sorry. Let's see. Should close this. All right, we're now having a quick look at periodic reports. Let's go to our mobile device now. Let's see if it's connecting. Yes, it's connected. Now, periodic reports are found in this when you click this button. The other option is to scroll to the right, come to reports, and then periodic reports. So these are the periodic reports from P1 up to P15. These are periodic reports that ideally should be filed on number 6. Number 6. Now, for a small business, we probably won't have periodic reports. Well, if you want, you can have them. If you don't want, it's up to you. But what is important ultimately is the year-end accounting file. That's number 7. That one is a must. We need we need the year-end reports plus the source documents. Those are a must. And of course, there's an option of the simplified filing system, whereby we have only one file. This is probably a sizable file. Big file, could be a box file or spring file. And that is where we file everything for that financial year. So we'll have the documents mixed up. It doesn't matter. What is important is that we are able to identify the document being recorded at a particular moment. Not saying that these are incomes and those are expenses. No, they can be mixed up. And remember, we've got to match the record in the software with the source document. And then, to speed up the whole process, it's good if the documents are arranged in a monthly order. Now, if they are arranged in monthly order, then we are able to set the recording date. Now, when the recording date is set, any form that comes up, let's have a look at this one. Any form that comes up, in this case we said 30th March. Okay, any form that comes up will come with the month of March. So you click once and you're able to play around which date. If it's the 10th, then click 10 there. Is it going to respond? If it doesn't, then I click on the device. Yes, it has responded, 10th March. Okay. Now, that one is easier than having a date in March, whatever current date it is, and then we have got to record a transaction. Let's see, somewhere in this is March, probably October 2016. So that probably means just a second. Let's the issue at hand is moving from one month to another. Now, different devices have got calendars in different formats. When you look at iOS and Android, small differences. Even in versions of Android, version, let me see, the current one is 7 point something. 7 point something. Version 6 has got slightly different features. Version 5, version 4, and so on and so forth. Now, this app this app is compatible with the lowest version is 4.4.2 of Android. iOS keeps updating and it's self-updating for most devices. Now let's see. Now, when it comes to moving from March 17 to about July or August 17, then it takes a bit of time. Let's see how we move. We go to scroll up. We need to go to about July 16. So it takes a bit of time to scroll. However, how much time it takes depends on who. We've got different valuations of time. So when we set the recording date, then it makes the process faster. You set the recording date and then each form keeps coming up with a month. Now let's see. So when it comes up with the month of April, for example, just one extra click and you've got the date in place as opposed to scrolling up and down. So that is the advantage of having transactions recorded in a monthly order. or rather the source documents being in a monthly order. That's all. It simply speeds up the recording process. Otherwise, if they are not, then you simply take a little bit longer. Now, the next final concept we're looking at, or the next one, is double entry. Double entry. We are saying that for each and every recording, there has to be double entry, and this double entry refers to the general ledger. General ledger. You don't need to know this, but it's okay if you get to know this. Double entry in the general ledger. And of course, we've got forms that include the debtors ledger and creditors ledger. Creditors ledger. Okay, but otherwise for the general ledger there's got to be double entry. And in case of a credit sale, a transaction involving debtors, then we've got an extra entry in the debtors ledger. And a transaction involving creditors, we've got an extra entry in the creditors ledger. Otherwise, for the general ledger, we're looking at double entry. Now, double entry is to do with where is value coming from and where is the value going to. So the value coming from is the giving account. In the case of a sale, that one is a little bit complicated. Let's look at cash. Let's look at a cash. Which one is the best example for this one? Income value from, okay, let's look at a bank transfer. Bank transfer, we're looking at a deposit. Now we're looking at a deposit. In the case of a deposit, the receiving account is the bank account. And if it's a cash deposit, the money is coming from the cash account. So the cash account is credited. It's the giving account. That's where the money is coming from. And the bank account is the receiving account. That is where the money went to, and is the account to be debited. Now, that is one principle enforced in all recordings in the software. Otherwise, we would have differences on the trial balance and the balance sheet. Okay, and then finally, we've got completion marking and duplication. Now, ideally, each source document should be identified with a number. And the assumption is that the documents don't have numbers before recording. Now, remember, the numbers we're referring to should be internally generated, not external numbers that come with documents. We're looking at internally generated numbers. You generate your own sequence of numbering. Otherwise, documents come with numbers in thousands. 4, 5, 7, 6, 8, 9. In thousand. I mean, it doesn't make a lot of sense. Okay? So it's best that we generate internal numbers and you number them according and after, okay, at the time of recording. For example, in this case, because we started with this one, it automatically becomes document number 1. This one is document number 2, number 3, and so on. Now, that number is what matches the source document to the transaction inside the software. Now, the software generates a report, especially the ledger accounts, both periodically and year-end. Now, on that ledger account, there is a transaction. So that transaction is supported by, let's have a quick look at let's see. Let's look at the year-end reports. Quick look. Now let's look at the mini year-end reports. And then we'll look at which report. Let's look at G3. G3, we are looking at all expenses. Now, let's tilt this one very quickly. Let's rotate this very quickly. Now we are looking at account 25. Account 25, we are looking at document number 4. So we scroll down here, we want document number 4. So we are ideally, that number identifies that document and matches it to what is in the software. So in the case of support, whoever is going to inspect, whether it's an auditor, whether it's a tax inspector, when they want to verify that 13,920, they're going to look for document number 4. So they get onto the file, they are simply looking for document number 4. It makes work easy, even for us, because remember, these records should be kept for 6 years after the end of the financial year. So we're talking about distinguishing marks. Try to use a tick. Okay, tick really indicates that the document has been recorded, but then the internal numbering system put a number against the document, and that one gives it an identity and also indicates really that it has been recorded. If you want, you can add a tick to this, but if you don't like, we can say that a number only appears there after the document has been recorded. And then we are saying that duplication is illegal. It's fraud as far as tax officials are concerned. Each document should be recorded only once. That is why we need to tick the document or add an identification mark to show that the document has been recorded. Now let's go back to this account here. Now, if any of these documents was recorded twice, we can see that transaction appearing twice on the account. It could be easy to expose, because I mean, you see 13,920 appearing twice. Then you ask yourself, what are the document numbers? Let us trace the document numbers and verify if those are different, and if they are the same, then that is fraud. So it could be easy. Actually, it's easy to pick up, unless you mess around with the figures. So each transaction and each document should be recorded only once and marked, and that is what we mean by completion marking. Well, that brings us to the end of this session where we looked at documents and the basics. In case of any questions, please send us an email or find us on Skype at Accounts Coaching or Moses at DIY Tax Return. And of course, we're looking at incorporating a WhatsApp access very soon. Thank you.